We have Graham Rodford with us, who is the CEO of Archax. Love to have you here, brother. Thank you for joining us.
Great to see you again, Jake. Thanks for having me.
Absolutely, brother. So for those that may not know who you are or anything about your company, we know that you guys are affiliated with Ripple. They made a strategic investment in the corporation. But if you could give some background on what you've been up to and what you guys do in this space, and then your background as well.
Yeah, sure, no worries. So, as you said, CEO, co-founder of Archax, set it up in 2018. So, been around for 7 years now. We've always been working in this RWA, STO area, really with the belief that everything's moving on chain. Background of myself as hedge fund, so as chief operating officer of a hedge fund here in London. Got interested in crypto in around 2013, and around 2017, 2018, when all the ICOs were taking off, kind of realized that this technology wasn't just about, cryptocurrencies and utility tokens, but actually had the power to change financial services. So kind of thought to ourselves, look, if it happens, then everyone in the world is going to be trading their products on chain. Every institution is going to want someone credible. And we decided to go down the regulated path a lot earlier than everyone else, really. So went to the FCA in the UK, became regulated. I mean, 7 years ago was probably quite early to apply for regulation in RWA, but we became the UK's first regulated digital securities exchange, custodian and broker, and got the UK's first crypto asset registration as well in 2020.
Yeah, incredible, man. So you guys have a long-standing reputation in the space. Have been doing a lot of incredible things. You guys use multiple backend softwares for your custody. We
Yeah.
talked to you guys a little while back. You were using Fireblocks. You had Medico, and then I think you had one other as well. Can you talk to kind of the technology that you guys use to be able to provide the services that you do?
No, you're all right. We have the two. We have Fireblocks. Obviously well established, especially amongst the large crypto trading firms. We've got Metico, which got acquired by Ripple Custody. So we work with Ripple Custody as well. We use that more heavily for tokenization services at the moment. They kind of give us a good breadth of offering. So we ourselves are a regulated custodian. So obviously we rely on their expertise in encryption and cryptography, but we're the custodian, so we can custody securities and crypto in the UK. And obviously, when you create digital securities, they really are the same thing as holding cryptos. And our custodian is a qualified custodian in the US as well. So we kind of have this cross-functional ability to hold a lot of tokens in different types, securities or crypto, but across kind of in different custodial services as well. So we'll see where we go in the future. But as you mentioned Ripple earlier. They've they're one of the chains we tokenize on. We've got 9 or 10 chains, I think, now tend to be commercially driven. So it doesn't mean we don't like anyone individually. We like working with our partners. We like to help develop traction on the chains, and we're just trying to move everything forward across a range of technology.
Yeah, I think you guys are a leader, and you're definitely innovating in that space. I guess on the RWA side, like, where have you guys seen the most traction as far as tokenized products at this point? Is it private credit, is it investments or private equity? Is it real estate properties? Where are you seeing interest from people, and where have you got traction?
Yeah, it's good that you kind of split up interest and traction there, because it's like since we started, the interest has been across a range of products. So, still a day doesn't go by that someone doesn't contact us about their tokenized carbon credit program or real estate program. But getting those live is pretty challenging. A lot of those products have a negative selection bias in that they've tried to raise money doing everything else, and then they kind of go, you know what, let's try a token. So finding good quality projects is challenging, and we've gone through hundreds of them over the years, and there's still interesting use cases there, but there's a lot of things that need to be solved to tokenize carbon credits, real estate. I mean, people have done it, but they don't really bring the liquidity that everyone thought they would. They kind of just make it tokenized for now, and we can talk about it later, but we're kind of trying to work on secondary markets and liquidity that solves some of those problems. But where the real excitement has happened, which probably is counterintuitive, is around the liquid products, right? That we're seeing around treasuries and yield bearing stablecoins and the like. And the genesis of that is probably the success of stablecoins with, Tether and Circle, absolutely killing it, not only in terms of the traction they get on chain, but also the money that they're making has made a lot of people kind of look and go, okay, what is it about these companies that are making so much money, and why are they holding all of the interest back from the clients. And some of that's to do with regulation, but kind of the money market funds, like the Aberdeens and BlackRocks of this world, they have products which for years have tried to maintain a value of one and give a return to clients. So they're kind of looking at this going, well, you know what, our tokens can transfer in the same way that those stablecoins can, but you can earn a return as well. Now, obviously, securities are a bit more frictioned, but we're starting to see regulations coming in, more players like Archax coming in as well that are breaking these down. I mean, Securitize, I think the number's nearly at 2 billion now that they have in the Biddle fund with BlackRock, which is pretty exceptional. We're starting to appear on the leaderboard now, and there's others on there as well. I think there's like 4 or 5 billion going on there. So the numbers are coming, they're accelerating faster as well, but really the kind of breadth of offering is still quite confined to let's call them yield bearing stablecoins, but money market funds, yield bearing products, whatever you want to call them. We're still not seeing, hey, there's this tokenized real estate development that's, trading all day long and being transferred all over the world. That's really not there yet. People are tokenizing them, but they're kind of just illiquid holdings still. Whereas actually the exciting thing about these tokenized stablecoins, yield bearing stablecoins, money market funds, is there's actual use cases there as well. It's not you just tokenize a product and it sits there. It's that you actually tokenize a TradFi product and you add to the utility of it.
Yeah. Well, it's easy to swap between cryptos or some other tokenized asset and that, right? So like to be able to rebalance your order book, if you're a money manager, it's much easier and faster to do that, I would assume.
Yeah, exactly.
Brokerage.
Yeah, people are working on that right now. This idea of 24/7, like in crypto world, you want to be risk off. You buy Tether, you want to go risk on. You buy Bitcoin, whatever you might buy, and you can go in out all day long. But if you wanted to move back onto the fiat rails and go into a traditional money market fund, well, you can't do it on a weekend. You have to wait for the banks to be open. If you're in crypto, we all know banking's a problem. So you're probably going to be kicked back a couple of times, have an account shut down. Like, it is problematic. But once you've got a tokenized money market fund where you can switch in and out, in the same way you can with a couple of, well, I think Biddle and a couple of others, you can switch backwards and forwards to stable coins, at least up until a limit 24/7, 365, you start to really open up the potential of going risk on, risk off all day long, which is a great advantage over traditional products.
Yeah. I mean, you've got volatility in markets and you want to be able to, move that quickly to safety if there is some, or even to a tokenized VIX or some other financial product to be able to capture those returns on the volatility in the market, right? So, yeah, excited to see all of this kind of transpire. But I'm with you. I think it's going to take a little bit longer for the more alternative illiquid investments to see a secondary market that provides the liquidity and the depth in the order book that you're really going to need to get the advantages that tokenizing those assets would provide. We're working on a lot of those things. What products have you guys launched in the last couple of years that have seen? And when we originally talked to you, like a debt note or structured note against Bitcoin and ETH, there was some interesting stuff that y'all were working on.
Yeah, we've so the most successful product at the moment is the Aberdeen USD tokenized money market fund. I think that's probably one of the best performing RWAs, really, the similar sort right now. That's just yielding over 5%. So that's doing pretty well at the moment. In terms of slightly more unique products, then yeah, we actually did our first structured product trade last week. So the idea of these is the combination of money market funds, let's say, with crypto options. So if you want to dip your toe into the space, but you don't want to risk capital, the idea is that you take on a 2-year duration product. You invest 90% in money market funds and the rest in crypto options. And over the course of the 2 years, your capital will hopefully come back in the money market fund products, but you may have the potential to make returns out of the crypto options as well. So they're the sorts of things we're experimenting with that give people this exposure, but also protect the capital as well. I mean, some people argue, why wouldn't you just divide your portfolio up? And sure, that's also true, but some people just like to capture these in one product.
Yeah. So this is kind of news to you, so we'll go back and forth on some of the stuff we haven't been able to catch up since Swell, but I think it'll be good for the viewers. So a couple things. We launch our fund for digital wealth partners on Tuesday next week. We'll do our first capital call. And the way that this is structured is you put up the XRP, they're in-kind allocations. We work with a sub-advisor that issues trade a credit line up to 80% against it. And then they're able to trade that in their proven market neutral strategy to produce cash returns on people's crypto while they're still leveraged to the upside and they get the appreciation.
Yeah, great.
So,
And it's pretty, yeah, and it's like that, that is all of those opportunities are there. And one of the things about, we talked about real estate earlier, like what's the use case? Well, kind of one of the use cases for any of these liquid products is you can tokenize them. And in the past, you haven't really been able to do anything with them, right? Your name is on a bit of paper somewhere that says that you hold something. But, when you look into, I mean, I always use Aave as an example, but Aave compound balance or whatever, like if any of these on-chain lending platforms, you go there with your crypto, systematically can borrow against something. Like for sure, there's going to be a world in the future where people will lend you against anything, right? Whether it's art, real estate, a vintage car, a watch, or it could just be your longer position that you're super bullish on and you don't want to crystallize a tax gain, but you want to get invested in something else. We see it in crypto already, and it will exist in traditional markets. And then there's not just the borrowing against it as well. There's all these use cases like the one that you gave, and also within any private equity or hedge fund of funds that at the month end they want to get out of one fund into another, and then they have to borrow money because they haven't got the money back from the one they're redeeming, but they need the money to subscribe into the new one. All these edge cases where you need some sort of financing in the middle, it can all be so much more efficient if the underlying assets are tokenized.
yeah, absolutely. And you can hold that collateral, and so the other product that we've been working on, and this could kind of lead into maybe the announcement that you guys are going to have in the near future, is we've issued a DR, depository receipt, in partnership with RDC against XRP. So we can hold XRP in custody with our partner here in the US, Anchorage. And we're working with other broker dealers to be able to reflect that in their infrastructure because it has a QSIP number that's registered with the DTCC. We basically lock that. It's then mirrored in their infrastructure, and then they can release margin against it, or we can use it in other applications to be able to generate hopefully a risk-free return for our clients. Everybody's talked about, all these investment banks holding your XRP and paying you a yield on it. And so we decided to create a product around that. So I don't know if that's something that you guys would be able to work with what you recently acquired here in the US.
More on that in a minute. We may be able to. One of the things that interests me, and we haven't really exploited in the UK yet, but one of the things about these instruments, mainly crypto, is what is the classification? And I mean, in the US, obviously, you guys have a very much, is it a security, is it not? But that same question happens everywhere. It's not just, even though a lot of platforms launch everywhere in the world and say available everywhere except the US, when you look into the regulation, your list of jurisdictions where it shouldn't be available is probably bigger. But what's interesting about your product is if you can take a cryptocurrency and give it an ISIN or give it or make it into a security, wrap it in some way. Some people may ask, why would you want it to be a security? Well, the answer to that is there's a number of investors out there that are only allowed to invest in security. So there's pension products, there's ISA products, there's saving products, there's all these kind of things where they need to be able to hold securities only. And then if you can start tapping into that market where you can wrap them into savings products, there's a whole world of wealth out there that will be able to invest in them. And then to your point as well, maybe you can build some smart contracts around it so that they're not, you can immobilize the cryptocurrencies there, but you have a little more control over a regulated product that's being circulated as well.
Yeah, that's the idea, be able to generate I don't want to say a risk-free return, but a very, very low risk return for our clients. Because the conversations that we've had with investment banks here, they're still years away from being able to provide FBO accounts for retail to hold their digital assets. They may have the infrastructure to be able to facilitate their own back-end settlement and things, but as far as retail is concerned, it seems a bit further off. Whereas you pretty progressive on that. Y'all have an infrastructure to be able to provide those services there in the UK. Is that true?
Yeah, exactly. We can already hold them here in the UK. There's actually, we're not allowed to say the name publicly, but there's a US bank that's appointed us as a sub-custodian, and we're working with them to connect our APIs to them so that their clients that want to see their normal assets alongside their crypto assets, we can feed ours through and they see a consolidated position. So, we obviously like that world where the traditional players just appoint someone like us to fulfill that service. And as you mentioned earlier, kind of happy to announce as well that we're moving into the US. So we just acquired a broker dealer. We're going to be starting with the brokerage permissions, ATS as well in the US, but we want to be able to offer custody there in the US as well. So starting off with RWA, traditional securities, but hopefully over time rolling out our full suite of products over there of RWAs and crypto.
That's fantastic, man. Excited to see that transpire. And yeah, we would love to partner with you in some capacity now that you guys are over here.
One of the reasons we're coming is to partner with EJ.
Spent a lot of money to do that. I appreciate the enthusiasm. So I guess, what else is on the roadmap for you guys here in 2025 as far as Archax goes? And then we're quarter in, we've got some pretty bullish bipartisan, commitment toward getting regulation around digital assets here in the U.S. Obviously, you're moving into this market. What else do you guys have that you think is going to be, or that you can share?
Yeah, I mean, just end of last year, we bought a European broker dealer as well, actually. So, that one, I guess, was less strategic than the US, but we were in Europe pre-Brexit anyway, and then we kind of got kicked out. So really, we're just getting back to where we started there. But Europe's a big market, so now having Europe and the US as well means that all of the RWAs we have, there's over 100 of them, can be distributed across the UK, the US, and Europe over time. So a lot of this year is going to be about building that out. We've still got a crypto exchange, we've still got an OTC desk. Those things are growing pretty nicely, but kind of strategically, what we are. There's quite hard when you're in the RWA space because there's a lot of money to be made doing things in crypto in the short term, but we're trying to look out and go, what does the world look like in the future? And starting to look at these use cases like we mentioned earlier. So we're doing a lot of work around the 24/7 exchange of RWA for stablecoins. How do I get into a money market fund 1 minute and into Bitcoin the next? That's a huge area for us. The stablecoin space is huge. Whether they'll all be successful or not, I don't know, but with our platform, we can create stable coins across a number of jurisdictions. We can invest the stablecoin reserves into a number of money market funds. We just actually tokenized some treasuries there the other day. We've got a rolling treasury product that every 4 weeks just rolls, low basis points, available across 9 chains and a number of currencies. So that's a pretty cool product that we're going to be rolling out soon. So really, we're kind of providing these treasury solutions, but also saying, why should a treasurer in any corporate really be looking at digital rather than traditional? And maybe right now there's not too many reasons why you should do it, but pretty soon around the corner, as we mentioned, you're going to have 24/7 markets, receive distributions on chain, maybe be able to borrow against them on chain repo markets, and the biggest use case all the asset managers and banks are talking about is collateral. If you're someone that owes someone money, usually you post eligible securities, usually treasuries or the like. But what if you could transfer someone tokenized money market funds? I owe my bank $1 billion. If they take the Aberdeen money market funds, I sell it now, I send it now, it moves on chain, instantly moves across to them, and then maybe the margin goes away when the price is remarked later and they send it straight back to me, rather than this like clunky end of day, what's your margin, send it across. Maybe I put a buffer there just in case, but move to this just in time model instead, where you're just matching the calls as they happen. That's the kind of world we want to happen and we're building toward.
Yeah. Well, I think you guys are the innovator in the space. On that, I mean, now that you're moving into the US, do you see any competition here that's anywhere close to what you guys have established up to this point, or even there?
Yeah, we see a lot of and we like them, and they can be complementary. A lot of products, if you like. So there's a lot of people in the space that have fewer regulation, and what they tend to do is set up a fund, an offshore fund that buys something, and then they tokenize the fund. So we see that model being repeated over and over again. So you end up with some quite innovative products, but ultimately the products tend to be held and then sold, and maybe so much can't be done with them. Whereas all of those products on RWA, there's some great ones there, Superstate, Hashnote, all those guys, we can hold them, we can custody them, we can broker them, we can sell them. We can maybe act as a secondary market for some of them over time. So we're really a kind of home of RWA where they can all go to. That's how we think of ourselves. And Securitize, we're very close to them, obviously. They do similar things to us. I'd say we're slightly distinct distinct though. They're more down the transfer agency side of things. Whereas we're more market infrastructure. So I don't think they're a custodian. And we're obviously focused heavily on secondary markets and central securities depositories, whereas they've had a successful transfer agency business. So, hopefully there's some stuff we can work on there with them, but not really. I mean, the space is, anyone that was in STOs or RWAs for the last 7 years has probably had a pretty rough ride of it, right? The regulations have been all over the place. Anytime crypto is booming, no one cares about money market funds performing at 4 or 5% a year, but when the market, is maybe a little more tempered, or we're in a little bit of a short-term bear or whatever, then people get interested as well. And all the while that background interest gradually grows because the regulation builds, the banks start getting a bit more interested. It becomes the foundations become a bit stronger every single time. So it's kind of every time we come back, it's a bit better. And we're getting to the stage now where like this isn't going away. All of those institutions have huge RWA products. Most of the protocols we speak to are focusing on RWAs as well. Everyone realized regulation is coming, and working with regulated securities and regulated partners kind of reduces your risk of any sort of issue.
Yeah. Well, that's why we've structured things the way we have. So we're a registered investment advisor. We provide institutional grade custody and products and services to our clients in a regulated way, wrapping them in securities, very similar to you guys, right? We want to be above board and kind of set the standard for what that looks like for digital assets. But on the RWA side, there's been a time in the past where you said that you thought $50 trillion worth of value would be tokenized.
Yeah, and I'm disappointed how bearish I was at this. Yeah, look, I mean, maybe I don't always get the timing right, but I am convinced more every day that every asset is moving on chain. Like every single equity there, like every instrument out there, it just makes more sense. And when you've got the cash and the security or the asset on the same rails, everything becomes easier. Right now having like your share register somewhere and your cash somewhere else, creating interaction between them is just friction. But it's not just securities, but land registry, car registry, whatever it is, anything that has a register of ownership that can be on chain. And anytime you have some sort of digital cash on a similar chain, that transaction can move on chain. So like the 50 trillion number, I mean, I'm ever the optimist with how, I mean, we've been here 7 years and the plan was probably this was going to happen 6 years ago at the start, but like it's just happening, just not at the speed that I would like to. But I think when it happens, there'll be a point of inflection. Like if DTCC come in on Monday and say, guess what, everyone, we've moved our main books and records on chain, or we're running it in parallel. Like, I don't know what the number is, but that's billions of dollars.
600.
That, yeah, it's just, this is it's a huge number that's just going to move on chain overnight. And then you've got Euroclear, Clearstream, and then you've got all of the, the guys like Carter, Republic, I don't know, all these guys that have like private notarized holdings as well. Yeah, even on our side, I mean, we have about, even the stuff that's not on RWA, we have a few 100 million of private securities that are all held on a variety of blockchains at the moment. And I'm sure, I think like, Tokenized, Securities, all of these guys have done billions of dollars on chain. It wouldn't surprise me if the number of RWAs that's been tokenized is getting on for $1 trillion already. So yeah, at some point 50. Maybe not as optimistic as I am in the past. But whatever everything is, it will be everything at some point.
It's Carlos that was on the same stage as you as well, and he had far less optimism. CEO over there at Securities.
Yeah, I don't know what he's worried about. He's up to 2. Yeah, exactly. Like he's yeah, I mean, like it's going to happen. I mean, it is going to happen. We're seeing it happen rapidly. We were speaking to a bank yesterday. They're talking about tokenized deposits and how in the future every one of their clients' deposits are going to be tokenized. I mean, every one of those banks is billions of dollars. Like, it's not going to take much to move it. When it all starts moving, it will move rapidly.
What networks do you think have the most viability for that? Just on the integrations that you guys have and the ease of transfer, minting real world assets on chain. Like, I mean, you're no better than anyone. You have Hedera, XRP, XLM, Algorand. I mean,
yeah, there's a lot of factors there. So I think we are, apologies if I forget any, but we have Algorand, Ethereum, Polygon, Hedera, XDC, Ripple, Stellar, Solana, Arbitrum. Oh, there we go. I've missed someone now. I can't even think who it was. Someone else that I forgot. And I was like, anyway, we have yeah, we have a number, and then we like them all, right? But there are pros and cons to each of them. So if you like, you mentioned Ripple earlier, XRPL. So, Ripple has a big presence. It has a lot of people that like it. It has a huge community. So as a result of that, it has traction. And a lot of people using it, and it's done a good job of always staying current. Some chains come and go; they've always been around. They've got huge supporters. I think we've got best part of 50 million on XRPL right now, but the wider infrastructure, I mean, I know they're pushing hard, but the wider infrastructure needs developing. Whereas you flip over to Ethereum, and you've got everything you want there. If you tokenize securities, I mean, you can go to Stanley and say, hey, can I have in fact, they might have just done it the other week. I haven't read about it yet, Horizon, I think, but you can have a regulated Aave. You've got Uniswap there, so you can start looking at experimenting with DEXs. You've just got all of these, everyone's got a wallet, right? Most people know how to hold something on Ethereum, whereas, some of the chains like like XDC we just started working with, great. It's fewer people have an XDC wallet, but that doesn't mean some of the stuff about the chain doesn't sort some people. And so I suspect where you'll end up is that either someone will just dominate, but you'll probably end up with different chains for different purposes. So, maybe something like Canton, where the banks want to work on private networks, maybe that does well. Hedera, who we work with, all of their nodes are operated by companies that have to sign up saying they won't operate in a sanctioned jurisdiction. That's really important for some people. Some people will be on Ethereum because they like the infrastructure. Some people will be on Algorand because of the low cost. It really just depends on everyone. And obviously Solana, just in terms of popularity, developers, ecosystem, that's pretty huge right now as well. So we're kind of we have ones that we work closely with, but we just try and listen and try and quite often get stablecoins coming to us saying, hey, I want to launch on. The most recent one was Arbitrum and Solana. It's like, great, we chat through why can we do it. Yes, this is what we can do. We can still offer all of our RWAs on those chains for them. They can still put their reserves in those assets. We don't try and influence them one way or the other. Some people come to us with no view whatsoever, in which case we just kind of say, hey, this is what you get here, this is what you get there. But it's it's good. I think there's too much fighting sometimes on Twitter about I love my chain, I hate your chain, whereas in reality we all just want it to push forward.
Yeah. So you mentioned XTC in particular. So like trade finance, tokenization of contracts or debt notes or warrants, I think that they provide really good infrastructure for that piece. But as far as like real estate or private equity, probably not the chain of choice. And to your point, with Ethereum, we've seen a lot of traction there because it's kind of the leader for smart contracts, but you've got latency and gas fees, and there's some other frictions there that might not work for whatever you're trying to do. And then maybe you bridge to the layer 2, or you go over to Matic, the Polygon, to be able to settle those transactions. And there's a custodian that holds the underlying security. And you wrap that and you're able to transact, much faster and cheaper than you would on the underlying chain. But I'm with you. I think that there's a multi-chain, infrastructure in future. I think that there are going to be the Googles and the Amazons that probably take, 80% market share of certain asset classes. And then the other 20% is kind of fought over by a few other chains. That just tends to be the Pareto principle of how things work. Have you guys worked with Axelar or Chainlink to be able to port?
Yeah, we're just talking about it at the moment, actually. So yeah, we all of those guys got like Chainlink, Axelar, Layer Zero, Wormhole.
Mhm.
Like it's quite yeah. I mean, we went down the approach of building our tokenization engine, and we built out our required functionality on our engine. But obviously, that's like a slow and expensive way to do it. Whereas perhaps if you're issuing something, like if I was a stablecoin issuer and I wanted it on 130 tokens as quickly as possible, I'd probably be going to one of those guys, not to Archax. You'd come to us because you want to know it's kind of regulated and signed off and you feel a bit more comfortable. Whereas if your plan is how do I get it on the most chains quickly as possible, you go there. Some of the we're talking to a lot of those guys at the moment. Can you take a regulated security with certain controls and easily use someone else's protocol or system to map it onto another chain? Like I don't completely know yet. We're working it out at the moment, and I'm also not sure there's a great use case there. Like I don't know a better USDC.call I use quite a lot, which just shows you all the different chains that USDC's issued on. It's quite interesting. And I kind of use that as a way of saying, how many of these things really move at volume between chains. And you usually have like one big one and then a couple of small ones, and then, dribbles everywhere else. So I'm not sure the commercial opportunity is there for everyone yet. But in the future, yeah, if we believe in a multi-chain world, I like the idea that someone's using an Archax Aberdeen tokenized money market fund. They currently hold it on XRPL. I want to borrow against it. Well, there's no borrow lending app on XRPL. I go to the Archax bridge, I bounce over to Ethereum, I borrow it there. I get USDC because over on Solana there's something. You know what I mean? You just, and all this tech just becomes it's in the background. No one will see it anymore. You're just moving from product to product rather than apps on the same chain.
Yeah. Have you talked to Omni at all?
I haven't talked to them. One of the team.
Like an intro. They source the best staking rewards across all chains, and then like use a DEX to be able to navigate that and push it to the right place.
Oh, cool. Yeah, exactly. Yeah, those sorts of things, right? That's what you want to be able to do, rather than just like buying products on the chain you're used to. In an ideal world, you want to open your universe. I mean, if everyone just wants to, understanding the risks of bridging, for sure, and the costs of doing so. But if you can move around and get a better yield or get better utility, then why not?
Have you seen any of the errors that we've seen in like traditional finance, like people trying to rehypothecate things across chains? Like, is that
No, not really. Because the security stuff mainly that we deal with, it's just not as, everyone likes this idea that it can compete with stablecoins, but the friction is just too great because, if you're like unless you're a regulated exchange, you can't trade them. Unless you're a regulated custodian, you can't hold them for third parties. If you're transacting in them, then you might have tax, stamp duty to pay as well, regulatory reporting. So there's a lot of issues. They just don't tend to move around as much. I see solutions of problems, like we talked about some of the settlement ones earlier, but you also see like invention of new problems. So for example, in an ideal world, everyone thinks, okay, I subscribe to a hedge fund and I get a number of tokens, right? Or a fund. So like, I want to be invested from the 1st of April. I send my USDC and I get tokens straight away. But the way that funds work is they're usually valued, and the value usually takes, let's say, 2 days to be calculated. So I'm going to invest some USDC, but for 2 days, I'm not going to know how many units I got, which means I can't receive tokens. So what should I get before that? Should I get a temporary token? What can I do with the temporary token? And then when I'm selling it, how many units do I send them? If I want to sell $1 million worth, I won't know there's all of these like
new
problems. Yeah, there's like new problems that we want to create a frictionless 24/7 world where people can get in and out. But the way it all gets like it all gets solved when it all gets solved. And what I mean by that is like if the underlying instruments are trading on an Archax like on an exchange like Archax 24/7, if you've got price oracles for everything 24/7, then hedge fund valuations don't take 2 days anymore. They happen real time. You've got real time streaming of pricing. So Enzyme is a good example. I can't remember the website. Enzyme Finance is it? Like I really like their offering. They allow you to run on-chain funds that can only invest in on-chain protocols, and they've got real-time valuations of positions to calculate a real-time NAV so that you can create units real-time. Like if you at extremes, if you could do everything on-chain in the future, that solves a lot of problems about market-to-market positions. Anyway, so it's like there's I see things getting better, but not perfect.
Well, it takes time to iterate on stuff, especially when things are new. Like you mentioned, you run into new problems that you didn't have before because there were frictions or timeframes that allowed for certain transactions or red tape around these securities to like work themselves out. But now, if everything's frictionless and instant, I mean, there's tons of regulation that'll have to be either put into small contracts or changed in order to make this stuff work at scale, right?
Yeah. Yeah, I mean, like, bonds as well, if I bought a bond from a broker in the middle of the day, everyone would be like, "Well, you just get the interest from, well, yesterday, today," however they did it. But now everyone's like, but it's 2:41 PM, so are we gonna do second by second interest? Or, like, there's just, the possibilities have opened up new questions as well. So, some of that's like, you could do second by second yield distributions if you want, but depending on which chain you choose, that's going to be pretty expensive
Yeah.
all year long, and it makes sense at a certain size. And does anyone want second by second distribution? I don't know, but it's tempting to do it because it's quite good fun.
Yeah, it'll be interesting to see the timeframes that people want to participate on, and the velocity of money is going to be wild. That's kind of what this unlocks is how fast money can move across an economy. I think we'll get significant GDP growth just off of that piece alone. Have to mitigate some inflation. Probably have to reduce some M2 to make sure that that's not a problem. But I want to be respectful of your time. I know that you got a hard stop here in a short period. So, is there anything that you wanted to share with people aside from the announcement about the broker dealer, about Archax, or where they can find you if they, think they have an idea that they would
Yeah, you can always reach us on archax.com. Yeah, we're hopefully pretty approachable as well. Mainly focused. Obviously, we've got the UK, Europe, and the US as well. But institutions looking into this space, tokenizing funds, looking at tokenized deposits. We're working heavily on that space at the moment. And yeah, anyone looking into crypto as well. Just always happy to chat to people.
Wonderful. Well, thank you again for taking the time to come on here, and I think people are going to get a lot of value from this conversation.
Appreciate your time. Thanks, Jake.